This channel is for educational purposes only. Please do your own due diligence before making any investment decisions.
Hi, this is Joe Rabil. What I'm going to do today is go into the sell side. I want to show you a specific strategy that I've used over the years that I think can really help you pinpoint the area where you want to be a buyer or be a seller. All right. And I think this can help. I've used it on intraday charts, on 1 and 2 minute charts. And then when I started applying it to longer term timeframes, I was amazed at how it works pretty much across the board, daily, weekly, monthly. So I think this will be an important part if you want to be a trader and sort of exit on a move. All right. I think this can be incredibly helpful. I'll go through what I am looking at. Now, if you're interested in some of these techniques, you can go and start with the book. Now, I will say that the initial course goes into this information really in depth. But I think the starting point is the book. Also, if you do like what you see here, if you like the content, please hit that like button and also subscribe. Okay, so to keep it simple, I'm just going to focus in on weekly charts. And in reality, I'm really focusing in on this top scaling, just the price with the moving averages. All right. I'm not going to talk too much about what's taking place in the lower scales. Now, I think they can be an advantage to be able to look at that. But based on what I'm going to discuss today, it's not necessary. I'm going to keep it up there just so you can see how they work together. Now, let's just look at this McDonald's weekly chart. And what I want to point out here is, so I would do trades where, let's say I was looking to play, and it might be a 2 time frame approach. And let's say I was doing it on a 5 minute and a 1 minute, and I caught a move and the stock was starting to move in my favor. There were really 3 things that I was trying to identify. It's 3 or 4, all right, that I was trying to identify on the 1 minute chart to sort of pinpoint where I wanted to be a seller, or in this case, it would be covering, all right, on this drop here. And what I was trying to do is I'm looking at, so we almost want to take the 40 off. I don't do that, but mentally I'm sort of doing that because I want to focus in on the 18. I want to see how far away am I from the 18. Now, I don't use bands, okay? I know some people like to use bands trading around the 18 or whatever moving average you like. And I just don't do that. So mentally, I've got to kind of see that in my head. Okay, look at how far away. You see how stretched away we're getting from the 18. All right. I think that's a good strategy. I don't think you necessarily have to have a bunch of lines up showing you where you're overbought. And I don't, in this case, it probably would have been like here anyway, or it would have been something like that. And it wouldn't have necessarily given you like the perfect exit point either way. But what I'm looking at is how far away am I from the 18? That's number one, because typically what I'm trying to do, if a stock is topping out, I'm trying to take a short play right as it's declining and failing at the 18. So I'm looking for that point where we're starting to get stretched away, because what happens, as I've said many times, when we get stretched away, it acts like a leash, the 18, and it'll pull it right back up towards the line. It doesn't stay away from the 18 for that long. Now, so that's number one. Number two, I'm looking for 3 to 5 consecutive bars in the direction I'm going. And that means, in this case, red bars. All right. I want red. I want the color. Keep it as simple as possible. Green and red. All right. This is like romper room here. We keep it just look red, 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 red. Anybody, you should be able to teach a technique like this to a 7th grader. In fact, most of the stuff that I'm trying to teach, I try and keep it as simple as possible. Now, I know I'm using all these indicators and it takes a little time to get to know them, but once you understand the techniques, you should be able to teach them, again, to a 7th or 8th grader that's not necessarily, a big, hasn't been looking at charts his whole life, all right? You want to think that way. And in this case, it's really simple. So we're looking for red bar. Now, this was a red bar and this was a red bar, but if you notice, it had big tail, but look at how we got pretty consistent 3 strong bars in a row. All right. Stretched away. We're stretched away from the 18. That's number one. Number two is 3 consecutive bars. Now, they can happen in different ways. We could have a big bar. We could have, a smaller bar, and we could have like a narrow range bar. All right. In this case, the big bar was actually at the end of the move. So this was the biggest bar in the run. All right, look at this. You could measure the size of these bars. This was the biggest one. So that is a big red flag for me in this case. All right, in this case, it would actually be like a buying flag. I'm saying, look, I've been short this. I'm looking to cover. Now, typically what I'll do is sometime during this bar, maybe I'll be looking to exit. If it closes like this, I might, if it closes like this, where it's closing right at the low, I might see how we open up the next bar. Now, if it's a daily chart, I don't necessarily want to do that because, there's so many gaps on the daily. I normally will just take advantage of that and just and look to exit. But if it's intraday and I'm in a chart like this and it's in this position, then I'll see what happens on the next bar if there's no follow through. Or if we get some follow through and then it comes back up towards the close of this prior bar, then I'll just look to exit as it's coming back up. All right. So I just want you to understand what we're trying to identify is stretched away. And then we get either a big bar, a narrow range bar, right? Or on the following bar, let's say we don't get either of those. We don't get a narrow range and we don't get a big bar, but the following bar, we get one of our most important bars. Now, again, in my course, I go through essentially there's about 6 to 8 really important types of bars we want to be on the lookout for, or combinations of bars we want to be on the lookout for. This is definitely one of them. All right. When we get stretched away, we've got consecutive bars in our favor. We're thinking buy. In this case, it would be thinking buy. All right. I'm thinking I want to be a buyer. All right. If I get this many bars a row to the upside, I'm thinking of being a seller. All right. Now, if you notice, we didn't have any extreme moves, but we were getting stretched away here. And then this was a pretty ordinary looking bar. Nothing really fantastic one way or another. It wasn't a big green bar and it wasn't a narrow range bar. It wasn't a reversal bar. But then look at what comes up. You see how we get another kind of indecision bar? It's sort of a doji type of a pattern, narrow range, one of the more narrow range bars in the move. And then we get a red bar that kind of meets the same criteria. So again, I'm thinking I want to be a seller in this area. Now, this does look somewhat like a narrow range bar, but pretty green, closed near the high end of the range. I probably want to see it through the next day. All right. Now, what I might be doing is putting a stop underneath the low of that bar. Okay, if I'm trading and I'm saying, look, I'm on this, I've made a pretty nice run, I'm a trader, I'm not a trend trader, I'm a trader, I'm looking to exit, then I'm probably going to start tightening up below that, maybe give it a little room underneath, make sure it's below the 4 or something like that. But then we get another bar to the upside, but then it starts to get indecision. Now, if you put your stop there and then there, you're taking out a 2-bar low here. That was pretty much the end of the move. Now, you don't have to wait for that. You don't have to use a stop necessarily. You can just take advantage of that and say, look, this has been a great trade. It's dying out. The momentum is slowing. I'm not even looking at these. Now, here's the key here. If you're looking at this, you're trend trading for the most part. All right. These are going to have too much lag. Remember, I use the ADX for the prior swing, not the current swing. So in most cases, not always, but in most cases, this blue line is being used for what happened prior to that, not what's happening right now. So we have to look at the price action right now. And we want to see, am I stretched away from the 18? Yes. Am I up 3 to 5 bars in a row? Yes. All right. Well, if I meet those two criteria, then if I'm a trader, I'm really starting to watch this closely. Do I have a big green bar or a big or narrow range bar? No. Okay, well, all right, I'm going to start watching it closer. I might use like a 2-bar low. So once we close here, I could use a 2-bar low just to make sure I'm making there's a profit, meaning a 2-bar low is a stop. You could use a 1-bar low. It's just a lot of times there's a little bit of noise. But you get up here and then you start to see signs of hesitation, reversal, question mark in terms of how it's being traded. I want to be a seller. All right. So big moves down, big green, a big red bar, right? And then we end with a narrow range doji here. You see what I mean? So we want to be on the lookout for either one of those. But the keys are consecutive bars in a row. consecutive colored bars in a row and stretched away from the 18. All right, let me just give you a couple other examples because it doesn't play out the same way every time. Of course, if it did, then life would be easy. But look at this. See how we got this beautiful little pinch play here, and it triggers, and look at the size of this big bar. Now, this bar is not just a wide range bar. It's bigger. It's twice the size, even 3 times the size of every other bar out there. Well, to me, this is like 3 down bars all in one. Okay, so what I might not take it on that bar, but the next bar, if you notice, came down. This is just what I was describing in the last on McDonald's. We went to a new low, and then we come back up through the close of this bar. I'd be exiting right there saying, okay, this was a good trade. It paid me all at once. Sometimes the market does this. It doesn't work it out in 3 to 5 days. So we want to be on the lookout for that. I just wanted to be sure you could recognize it. All right, now look at this. You see how we get this move over on the left here? We got a rally up. It reverses down, moves to the downside. Now I'm not looking at the sell side or the short side or the long side or anything like that. I'm just showing you when we get stretched away from the 18, and we've had, in this case, 1, 2, 3, 4, 5. All right. Now this was a monster bar. And you could have been taken out here, and I'd say, okay. But if you look at the way this played out, it was just breaking down on this bar. You see, it was taking out these lows. So I don't know that I would look at this the same way. I'm trying to give you all these little nuances that can take place in this scenario. So I would probably, just looking at the way this is playing out and the fact that it's taking out fresh lows, I probably wouldn't be looking to exit here. But look at what happened. And we really didn't have a signal until we got this big bottoming bar stretched away. You see how stretched away we are, and we get this big green bottom bar. This is a great point to be to cover, right? If I'm trading and I get out on this bar, even at the end of the day, in this case, the end of the week, look at what happened after that. That was it. That was the end of the move. Now let's look at something a little bit different. We're getting stretched away here, and we do make a move to the downside, but look at what this is, narrow range. Look at how we broke to a new low, and we got narrow range at the bottom. And then we got a bottoming bar. You see the difference? So instead of showing acceleration or big, huge red bars to the downside, we actually break to a new low and we get 0 follow through. Well, that's a pretty big negative. If I'm short, I'm thinking, why am I not getting paid here? Why isn't there a big red bar showing up? So in this case, I'm looking to cover in this scenario. But again, do we have 3? Are we stretched away from the 18? Yes. Or we got 3 down bars in a row, red bars in a row? Yes. All right. And then in this case, it did go to a new low. We got a narrow range bar. Yes. Okay. So I know I'm really gotten a heightened awareness looking for a reversal, maybe using the high of that bar or just exiting at that point. All right. So you want to be on the lookout for these types of things. I think if you do that if you have this approach in mind, your ability to exit within a bar or two of the peak or the valley in a move is going to skyrocket. You're going to get way, way better at this. So use this technique, go back and practice on some old charts, and then start to look for them live. All right. Let me know if you have any questions. We'll see you next time.